Okay, good morning, everyone, and welcome to the first Coffee Microcaps virtual event for 2022. You're all very welcome to this morning's event. This is the first of 3 Appendix 4C results wraps. We've got another one coming tomorrow morning, breakdown for the weekend, and then another one on the 31st, which is Monday. My name is Mark Tobin. I'm the founder of Coffee Microcaps for anybody who's joining us here this morning for the first time. I'd like to welcome our new sponsor for the virtual events for the next couple of months. It's going to be DMX Asset Management. For anybody who's followed the microcap space in Australia for the last few years, the DMX guys should be well known to everybody. And they just recently launched their second fund. So be sure to check out their website for details on that. Compliance and disclaimer notice. Just quickly for anybody who's joining us for the first time, the companies we normally have presenting at these virtual events are capped under 300 million in revenue and approaching cash flow break even, or indeed already profitable, generally from outside the resources and the biotech sectors, what I like to call industrial microcaps. That can be in the healthcare space, financial services, technology, anything kind of outside of those two sectors. Structured this morning's webinar, we've got 2 companies presenting 30-minute slot each. That'll be roughly broken down into a 20-minute prezzo and 10-minute Q&A. If you do have any questions, please type them in the Q&A box rather than the chat function. Just makes it easier for me to moderate the questions to our panelists. The webinar is being recorded. So please note that, and it will be posted on the Coffee Microcaps YouTube channel tomorrow morning. So if we slip over a slide a little bit too quickly, you can watch it back tomorrow. You can follow Coffee Microcaps Twitter, YouTube, LinkedIn, and I also write a weekly paid subscription newsletter where I focus on one interesting microcap stock every week. First up, I'm delighted to welcome back John Kelly, co-founder and CEO of Atomo Diagnostics, and we're actually going to be joined by Will Souter, the CFO of Atomo. And after John, we are welcoming Matt Forman, founder, MD and Group CEO of Xpon Technology Group, a recent IPO just before Christmas there. So that's enough from me. I am going to stop sharing my screen and hand over to John. I'll let you know when I can see your slide deck now, John.
We don't have a slide deck. We're going to just talk to our quarterly results and then open up for Q&A.
Okay, perfect.
Lovely.
Are you going to lead off, John, or is Will going to start?
Yeah, certainly. So thank you for the opportunity to talk today. We are here to talk about our quarterly activity report for Q2. Obviously, we're a rapid test manufacturer, and we came to market initially developing and commercializing the world's first fully integrated single use blood test devices. And we've launched HIV and supported a number of customers launching their blood-based rapid tests on our award-winning proprietary and pretty unique platforms. We pivoted into COVID with the pandemic. We have an ARTG listed professional use point of care COVID test on the market. We've had it registered for over a year, and we've seen obviously significant demand for that product in the last couple of months, last couple of weeks, in particular, some pretty extensive demand, obviously with the Omicron outbreak. And we also have in parallel with that supply in process TGA application for the same product to be approved as a self-test version. And although they are the same product, they are 2 separate markets, and both of them are seeing significant growth at the moment. We recorded our best ever quarter in terms of sales of COVID products in Q2, and we expect to see that growth continue into Q3. And we'll talk a little bit about the numbers in more detail. But we We averaged about 90,000 tests a month in the last quarter, and December was certainly the biggest of the three in terms of monthly sales. And we saw that growth continue from December into January, such that in January we've sold more tests than we did in the whole of half one of FY22. So there's been a step change, and that's not going to surprise anyone who has turned on a TV or opened a newspaper. Rapid testing is now mainstream in Australia, and Australia in that respect has caught up with the rest of the world, and we are seeing some very significant opportunities globally for rapid testing beyond COVID as home-based testing becomes a much more natural, well-recognized and growing platform for home healthcare. And we'll talk a little bit about the US market, where those home-based telehealth and e-health businesses are really grabbing a lot of market share off the pharmacy and doctor office market. We also saw some continued growth in our HIV business, which was encouraging after a quieter period due to COVID in global health. We received some orders from our global health partner, Viatris, who used to be called Mylan, and we are in the process of currently manufacturing those volume orders this quarter. We have also seen some expansion of our distribution partner, Owen Mumford, into Eastern Europe, and some orders associated with that. And locally, we were very pleased to announce in this quarter, Q2, that the TGA have removed a number of very onerous prohibitions on the supply of our HIV self-test. We're the only company that has a HIV self-test approved for use in Australia, but we were unable to advertise that product. We were unable to reference it on the web. We were unable to sell it in pharmacies, and all of those restrictions have been removed. And we're already seeing a significant step up in demand for that HIV product. And with Mardi Gras season upon us, we'll be looking to expand our promotion and awareness and activities for HIV. Outside of HIV and COVID, we continue to develop new products. We're going to, in the near term, announce our swab test device, which goes with any rapid swab test, including COVID. And that's an accessory that really improves usability and improves repeatability and precision in home testing. And we think that product has a very significant opportunity, not just for COVID and other respiratory conditions, but any swab-based rapid test. And we're very excited about the home-based sexual health market, particularly in the US. That's a very significantly growing segment for online ordering of home-based healthcare services, and those services require easy-to-use, reliable diagnostics to really deliver to customers. And we think our technology is very well proven in that segment. We're very excited about that. I'll hand you over to our CFO, Will Suter, who'll talk about the performance of Q2 in a little bit more detail.
Thanks, John. Good morning, everybody. Great to be here presenting our Q2 FY22 numbers. And as John said, very pleasing cash flows for the quarter. We had $7.3 million in cash receipts for the period, which included about $5.5 million in customer receipts and another $1.8 million that came in from our R&D rebate. Obviously, a significant chunk of that cash flow related to rapid antigen sales in Australia, but also some of the cash flow related to our HIV business. And I guess, as John said, that's starting to build, and we're seeing some additional orders coming through from Viatris, which will be fulfilled in Q3. So good business across the board, and obviously, as John also mentioned, COVID rapid antigen testing growing late in the quarter, and then that demand really spilling over into Q3. So what that means in terms of the first half for Atomo is $9.5 million in cash receipts. As for revenue, unaudited revenue for the quarter of $4.6 million, including $3.2 million in product sales, and also funds and revenue related to the deal with Access Bio. Those that have been following the story might recall we announced in October a deal with Access Bio whereby they paid us a settlement fee. They also paid us in relation to a previous HIV contract, and they paid us in relation to some stock that we delivered them early in the year. And importantly, part of that was contractual a contractual commitment by them to supply us rapid antigen tests throughout this current calendar year. So that's obviously proving to be very useful for us now as demand for rapid antigen tests in Australia goes up. And so we're very pleased to have that deal working for us nicely now as we roll into Q3. In terms of cash outflows, we continue to invest in our R&D and our I guess the proprietary side of the business. You know, that's very important that we continue to do that in the background, whilst obviously everyone's very much focused on COVID rapid antigen testing at the moment. You know, Atomo is about generating that innovative IP, and I think John will talk a little bit more about that. So we continue to spend in that area. And then obviously the other significant spend was on working capital related to purchasing more rapid antigen test stock. And as I say, a lot of that stock's converting into cash in Q3 rather than in Q2. So they're really the core cash flow activities for the period, and I'll hand back over to John.
Yeah, no, I think that's the performance of the quarter in summary. In terms of us moving forward for the rest of this FY, we're well progressed with the recruitment of a senior business development and partnerships director in the US. We're looking to really establish that US business, start to expand our OEM opportunities across our blood-based platforms, also work with the telehealth and e-health players there to see what consumer health tests we can look to commercialize into those channels, and then also focus on this swab test device that we're developing that we're very excited about, and finding some commercial partners for the adoption of that as an accessory for swab-based testing, with initial focus obviously on home-based COVID testing, which is a huge market opportunity, subject to us being able to commercialize and scale the manufacturing of that technology. So a big US focus, but in the short term, really mindful of the opportunity in Australia here with COVID antigen testing in the short term, and we'll continue to be focused on that. We expect to have a good Q3 in that respect and close out the financial year in good shape. Happy to open up to any questions now. Mark.
Thanks, John. We've got a couple of questions in already. Let me take the first one. Has Atomo's COVID-19 rapid test been approved in other countries, e.g. we're seeing it on the New Zealand health approved list?
Yes, that's a great question. We received notification over the holiday period of that approval, and we actually have an announcement pending with ASX this morning in relation to New Zealand. So that will be, we believe, up on the boards quite soon. Okay, perfect. And that obviously expands our ability into the New Zealand market, and New Zealand's a few months behind Australia in its management of COVID, and with its management of Omicron as it inevitably goes through the population. So we do expect to see some demand from New Zealand in the coming months. Okay, perfect. In the previous session, there was mention of the China market entry for HIV and other tests with a local national diagnostics company. Can you give us an update on where that opportunity sits now? Yeah, those conversations continue, and we're still hopeful of being able to execute market entry strategy agreements for our HIV product for both China and the US. I think part of the challenge has been the re-emergence of rapid COVID antigen testing in the second half of calendar year 21 has really consumed the focus of most of the larger diagnostics companies as they reset their expectations. Most of the larger companies were seeing antigen sales drop off sort of through April, March, up to July. And it's only really with Delta and now Omicron that there's been a resurgence in rapid testing at that really, really high volume mark. And I think that's taken a lot of strategic focus from partners, and HIV is not insignificant, but compared to COVID, it just doesn't have the same immediate market opportunity. So I think conversations have been delayed as a result of that. But that notwithstanding, we do still see a lot of opportunity in both China and the US, and we'll be continuing to progress those conversations. Okay, great. And then the next question, what is the current manufacturing scale available for Atomo devices? So on On the blood-based side, so the Atomo devices that we design and own and manufacture ourselves, we're currently able to do about aggregated 20 million cassettes per annum. And that covers our blood-based testing, which is HIV and other OEM customers. On the COVID antigen product side of the business, we buy that product pre-made from Access Bio, who are an approved US manufacturer. And we have from them the contractual rights to buy up to 20 million tests in calendar year 22. And that entitlement is spread sort of evenly across each month. So that gives you some idea what the monthly capacity there is.
Okay, perfect. Maybe next one, maybe for Will. What's the average margin across AT1 products for Q2 results?
Look, Mark, obviously I can't go into the specifics of that, and certainly when we put out our half-year financial statements, later in the quarter, we'll be able to go into a bit more detail at that point. But what I would say is, across the business, we have stronger margins, obviously, when we're manufacturing the product ourselves and selling to OEM. With rapid antigen testing, we're buying it in from a partner, so naturally margins are a bit lower in that part of the business. Having said that, as our arrangements with Access Bio were settled and we started to bring in stock under those new arrangements, that certainly helped in terms of overall margins. And also, as demand has gone up, we've been very careful to make sure we supported our existing customers and our early customers, but also a number of corporates and a number of parts of industry are interested in buying good quality tests from reliable partners like Atomo, who have full support, who have regulatory teams and quality teams to support and provide customer service. And so they're prepared to pay a bit more for that, relative to some other tests on the market. So that has helped as well. And as demand has gone up, as the urgency's gone up, then we have seen improved margins on a kind of overall basis across the rapid antigen testing business in Australia. And that's also as we added new customers. So we added 70 new customers in Q1, which was, obviously a lot of activity across a broad range of industries and corporates. And then we added another 50 plus in Q2. And the existing customers ordered in, more frequently and in larger quantities. And then we are obviously adding new customers as well. And so that certainly helped on an overall basis to bring margins up. And I think we should see something in the mid 40s as we move into the new calendar year.
Another question in, is there an EU market interest for devices? They don't specify if it's on the proprietary side or the OEM side.
Yeah, I think there is still, we still think there's significant demand for our devices. They replace the need for multiple accessories to be used. They reduce steps of use. They automate a lot of the decision making and are much more precise for home testing. And I think that OEM market for us is still very exciting. I think, however, that with the overwhelming focus on COVID with the market over the last 2 years, a lot of non-COVID pipeline opportunities have been put on hold. And that's obviously impacted the OEM business outside of COVID. And that we see starting to dissipate as companies are now thinking beyond COVID. And we're seeing more inbound inquiries over the last month or two than we were through, 2021 and late 2020. So I think that OEM market is starting to emerge, and we're getting inbound inquiries, and we still believe the long-term opportunities for the devices in blood are really good. And we're also hopeful that this integrated swab device that we've developed really will provide opportunities for swab testing, and that, if we can commercialize it successfully, will significantly broaden the addressable market that Atomo is in, because we'll move beyond blood into swab testing, and that gives us a very significant uplift in addressable market with not just COVID, but flu, respiratory, and other STI applications that use swabs, not blood.
And then just a question on supply chain. It's something that's come up a lot in the last month or two. How are you guys managing supply chain and just the costs of, getting stuff in from the US, actually getting it in the first place, and, trying to match demand with supply?
Yeah, I mean,
Sorry, John.
It's been challenging. It's been challenging because there hasn't been a consistent government policy on rapid testing, which means manufacturers haven't been able to really pre-plan. Add to that, less air freight and more expensive air freight and logistics challenge, and it certainly is a larger part of the overall cost of goods to deliver the product in Australia than it was previously. That said, we are making good margins even with that additional logistics overhead. So as the market opens up and logistics becomes more affordable, the margins will only improve. There is supply chain pressures in rapid testing. There's only a finite amount of components and reagents and supplies. And while we've got contracted access for product with Access Bio themselves are competing for raw materials in a global market that's really stretched. So, that there are supply chain pressures, not just with Access Bio, but, globally that the market's having to deal with. At the moment, we've, got more stock arriving and we'll continue to place orders with Access Bio. They'll continue to accept them. And we'll just have to see what the lead time pressure looks like in terms of supply chain. That's a bit out of our control.
Okay, another question in from the audience. The recent Australian news seem to indicate some confusion about TGA data submissions for the COVID-19 self-test application. Is this still progressing? I think you did mention that in your comments, John, already, but maybe just a bit more color on that.
Yeah, so it is still progressing. We've made note of the fact that TGA have indicated that all tests, both listed on ARTG and pending approval, are going through a Doherty Institute review of performance, and our tests are part of that. So that's the update to market. That's still ongoing, and we're still hopeful of approval in the near future. Also worth pointing out that the professional use test is already approved, and while it's part of that program, as is every test that's on the market, we are approved and supplying that in volume to our customers in Australia.
Okay, let me just check. Have we got any? We haven't got any more questions at this present time, but if I can just ask another one on the HIV. You mentioned in your comments, John, I guess a re-engagement from government and public health officials around HIV testing. Is that, as we've kind of hopefully moved on from COVID, that governments are saying, hey, we need to get back to these pre-existing public health, ongoing public health initiatives that were there before, and the governments are really starting to refocus on things outside of COVID now?
Yeah, no, that's correct, and there's two reasons for that. The first one is that some of the HIV global health funding was kind of diverted to COVID testing, and that reduced volumes. But as well as that, a lot of people were unwilling to go to facilities for testing for HIV because in a lot of these countries, these facilities have got high COVID infection rates. So that, and across the board, including Australia, HIV testing rates have dropped through the pandemic. Governments are trying to get those testing numbers back up, and self-testing at home really is a safe way to do that. So we're starting to see more interest from self-testing in global health. And we've seen the TGA acknowledging that and removing restrictions locally for us to be able to supply into pharmacies and advertise our direct-to-consumer website through social media and other advertising channels. So we're very excited about the opportunity. We think we'll see strong growth in the HIV business over the next 3 to 5 years.
Okay, great. And if we can just talk about the US business for a second, John. You referenced in the Appendix 4C that you're hopefully at the final stages of appointing a commercial manager. Can you give us an overview of what you're expecting, that new headcount to kind of deliver in the first year? Is it to just really get market awareness on the Atomo offering, or is it to, hit the ground running and get sales moving as quickly as possible?
Yeah,
there?
I think it's the latter. We've been doing a lot of groundwork to have the runway sort of ready for that person to arrive. I was over in the US in November, having meetings with some of these new emerging e-health companies that are really growing rapidly and delivering healthcare direct to the home. We're talking to some of the larger diagnostic companies about our HIV business opportunity in the US, as well as our blood-based platforms and this new swab device. And we'll be looking to proactively, engage more with the market, and the outcome from this role is, or at least the goal is, tangible contract deliverables across those different areas, rather than just a general awareness of Atomo.
And you'll have to have a meeting with Mark Cuban the next time you're there. This sounds like some of your products might work well for what he's doing.
Yeah, and always happy for introductions to anyone who's interested in better testing.
I'll have a check my contacts. I'll WhatsApp you his number. Go ahead.
Very good.
Another question actually on the US, following on from my question. Are you planning to move ahead with US manufacturing site, possibly with US government support, or maybe private support on the, the HIV funding maybe?
Yeah, that's a great question. So we already do some of our advanced manufacturing. We have OEM sort of contract services in China for a lot of the plastic molding, but the higher sort of spec advanced manufacturing proprietary know-how that we've patented and developed, that's run in the US for obvious reasons. We are looking to expand that capability. Our new blister machine will be going over to the US, we think, shortly, and getting installed and qualified there. And that gives us a lot of capacity in the US to grow into US customer contracts. It also gives us the opportunity to offer the US market a made in the US solution, which for government contracts in particular is extremely helpful. And we also are, looking at what government support might be available for either manufacturing or product development. And I know I'm quoted in the Sydney Morning Herald today talking about the fact that the US has been more supportive of rapid test manufacturing at a strategic level than Australia. And I think, our expansion of US manufacturing operations reflects that.
And I think we'll leave it after this question. When you mentioned blister machines there, has the new Sydney blister machine entered full production as of now?
It's not entered full production because that full production will be commencing in the US, but we have been running it in Sydney and doing factory acceptance testing, installation qualifications, and making sure that we're very satisfied with the machine and it's working very well. But it will be getting transferred to the US and located and qualified there. We'll be running high volume manufacturing in the US, not in Sydney.
Okay, great. Jay, if we don't have any further questions, let me just double check here. I don't think so. No, John, Will, thank you very much for coming back in and giving us an update. And we wish you all the best for 2022, and be keeping an eye out for that announcement. I'm sure it's going to hit the platform in the next half an hour or so.
Yeah, thanks for having us.
Thanks, Mark. Bye now.
Thanks, John. Thanks, Will. And we do have our next presenter standing by. He's been waiting patiently, Matt Forman from Xpon. And I'd like to welcome Matt, the first-time presenter following the recent IPO of the company just before Christmas. Matt, if you want to start sharing your screen, I'll let you know when I can see this. Yeah, I can see your slides now, Matt, so you're ready to go whenever you're ready.
Excellent. Thank you, Mark. And good morning, everybody. So very excited to share the Xpon story today. We're fairly newly listed, so I thought I might take this opportunity to sort of talk a little bit about who Xpon is and what we do, and then talk through our recent quarterly results, which we announced to the market last week. So there's a number of themes that are really driving the growth of Xpon. The first is really this concern around privacy globally. And we all know as consumers there's this sort of increased awareness that we have around how our data is being used online. And that's sort of being matched by the regulators. And you see that all over the world. There's this much sort of higher attention from regulators around how these big internet companies are using people's information. Linked very closely to that is this technical, I guess, consideration, which is the phasing out of third-party cookies. So what third-party cookies are, they're a little text file that sits on your computer, and it enables websites and companies to track what you do online. So it's been used traditionally to track how people navigate the internet. So to give you a good example of that, if you're on Facebook, you see an ad on Facebook, you click on that ad, you go to a website, you look for some shoes on that website, that third-party cookie is sending all of that data back to Facebook, and Facebook's using that to track what you do. With the phasing out of that third-party cookies, that's a problem. It's a problem for Facebook. It's a problem for all the internet companies that have used this technology before, because they're going to lose access to that data. Excuse me. The solution for that, though, is the use of first-party data. So what first-party data is it's data that companies own about their customers and consumers. That information is, excuse me, can you just give us a second? I've got quite a sore throat. Sorry about that. Thank you. So that first-party data is information that companies own on their customers and consumers, and it's information that lives in various different silos of information within inside that organisation. So that could be things like your CRM, your point of sale, your e-commerce website. There's various different sources, and on average, there's about 6 to 8 primary sources of information. And what our platform Wondrous does is enables companies to connect up all of that information in the cloud. It centralizes it, and it runs a process called identity resolution. So what identity resolution is it has a look at all these different sources of information on these consumers and all these different data silos, stitches it together to create a single view of the customer. And once that single view of the customer is created, then the machine learning and the AI can do what it does best, and do things like predictive analytics. So some of the models that we have in our platform are things like purchase propensity. So it predicts which cohorts of customers have a higher propensity to purchase something, churn propensity, lifetime value prediction. There's a whole range of different models that the platform has that our customers can then take that information and in a really privacy compliant and anonymized way, synchronize that back out into the advertising platforms like Facebook and Google, and then use it to target ads to them on the internet. So, that solves a strategic problem for these big internet companies because it allows them to continue to sell advertising solutions that are targeting consumers based on their behavior. It's done in a very compliant, privacy compliant way. It also means that our customers, which are advertisers, are able to still get very effective and highly targeted ads. So what Xpon really does is it helps customers unlock that first party data and then use it to create better experiences and more higher return from their investments in their marketing and their customer experience. So just to sort of talk you through a little bit about how we go to market and how we land and expand customers. So we work with our customers across what we call this full stack marketing and customer experience technology stack. So that includes things like the cloud infrastructure to enable them to get their data centralized in the cloud and have all the right security environments in place in the cloud. We work with them in their MarTech and their data tech, which is our Wondrous platform there. We also then synchronize the data from our Wondrous platform into their advertising technologies, and advertising technologies are what's called ad tech. That's technology that marketers use to buy ads on the internet. So we're actually partnered with Google in that space there. We actually resell, excuse me, their advertising technology platform, which is called GMP or Google Marketing Platform. We also then help our customers utilize that data in the digital apps and digital products, and we support those digital apps and products. And finally, and I guess sort of looking forward into the future a little bit more as well, we help our customers with their digital experiences in this new immersive world, which is, Mark Zuckerberg's done us a great favor there with renaming Facebook to Meta recently, and we have a product in that space called HoloScribe. So that stack means we've got lots of different levers to drive growth in the business. It means we've got lots of different levers to continue to cross-sell and upsell our customers as we land and expand them. So just to talk you through, I guess, a typical customer journey. So typically when Xpon starts working with a customer, we'll start very small. We don't try and sell them the full stack. We solve a single problem. And that might start with doing something simple like a digital maturity assessment or an audit of their current environment. We build a roadmap of where they are today to where they want to go in the future. And then once we've got that in place, then we start laying the foundations of that stack and rolling out the different products and solutions that Xpon offers. So that journey for a customer, that could take anywhere from 3 months to sort of 18 months as we sort of move them through that journey. And we see customers sort of from an annualized recurring revenue perspective, they'll start on the smallish side, and that could be anything from 5,000 to 10,000 a month. And some of our customers are spending upwards sort of 600,000, 700,000, 800,000 a year in annualized recurring revenue. How we've got the business structured. There's two parts to the business. There's Xpon Technologies, which is our solutions business. We've got sales and operation hubs in Australia, so in Brisbane and Sydney, and also in London, which services the UK and Europe. We've also got quite a strong engineering team in Hanoi in Vietnam, and that's been really valuable for us, particularly with this fight for tech talent. There's a lot of amazing talent up in Hanoi in Vietnam. We'll be able to secure a really great team up there. On the platform side of it, that's our business units that's responsible for the development and the commercialization of our proprietary technology platforms, and that's the Wondrous customer data platform and also our HoloScribe XR platform. And I'll just quickly talk to the HoloScribe platform very quickly. So we think that there's a lot of hype around the metaverse, and I don't think the metaverse is a real thing just yet. I think there's still plenty of barriers there, particularly for hardware barriers like the VR headsets. They're still quite expensive. They're not ergonomic. You can't wear them for a very long period of time. And a lot of people still get motion sickness from them. So, until those things are resolved, which we think will be somewhere between 24 and 36 months, we think HoloScribe can provide a bridge for companies to the metaverse because it allows businesses to build out immersive, XR experiences without the need for those VR headsets. And the technology works inside of, web browsers and mobile phones on technology that's available today. So it means our customers can start to learn and test and understand and really get a good opportunity to learn what their consumers want before the metaverse actually becomes mainstream, which we think will be 2 to 3 years away. As far as our customers go, very much focused on corporate and enterprise customers. We go to market around core verticals. Financial services is a great vertical for us. Retail is also a great vertical for us, particularly retailers that have strong e-commerce presence. You can see travel there, although recently travel's taken a hit. But we've worked with both Webjet and Flight Centre, and we have for a very long period of time. Other industries that are very strong for us, non-profit, very strong for our HoloScribe XR product. Those non-profits use HoloScribe to tell these really rich and immersive stories that sort of help educate consumers about their causes and then get those consumers to support their causes. We've seen good traction in automotive recently with our HoloScribe product as well. Education is also another key vertical. So we've got quite a broad appeal across a whole range of different industries. But our sales strategy is very much focused around going to market against key verticals. Just be worth just sort of talking a little bit about our relationship with Google. As I sort of mentioned before, we're partnered with Google in the ad tech side of things. So we resell their Google marketing platform. We're also partnered with them with Google Cloud and also in the Google Ads business. So we've got quite a unique relationship with Google, and that we're partnered across those three sort of areas of their business. What that means is we're able to go to market together with the sales teams at Google. Google represent about 30% of the new leads that are brought into the business here in Australia. So we can go in with the Google Cloud team into, say, a CTO, into the technology teams to help solve a technology problem for a marketing outcome, or we can go in with the ad or the Google marketing platform team into the CMO or the marketing department to talk to them about how we produce marketing outcomes by better utilizing data and technology. So it's a great relationship with Google. It's very symbiotic. We help them, deliver great solutions to their customers. We help them generate more revenue. The customer gets a good outcome. And when the customer's getting good outcome and they're spending more money on Google, we're actually getting a clip of the ticket on that as well. So we call those usage fees, and they're a really high margin and fast growing part of our business model. So for every dollar that a customer spends on Google Cloud consumption, we get a clip of the ticket of. And for every dollar that a customer spends on advertising through the ad technology, we get a clip of the ticket on as well. So it's quite a profitable relationship. We're also partnered with Facebook, as I mentioned at the start. We're solving this really strategic problem for these big global vendors with this phasing out of third-party cookies. The relationship with Facebook's a little bit more nascent than Google, but we're certainly focused on developing that and growing that over time. So our Wondrous customer data platform, I sort of talked very briefly about that at the start. So there's really three core things that it does. It helps customers centralize all these disparate sources of information they have on their customers and consumers. It improves and enriches that. So it does our identity resolution. It sort of understands that single view of customer, and then our machine learning and AI can do the predictive analytics on it. But most importantly, it allows our customers to then activate that data. So when we're talking about activating that data, there's a number of different use cases for that. One of them is advertising. So, a customer can take an audience that the machine learning's predicted might have a high propensity to buy something, take that group of customers and just in an encrypted and anonymized way, synchronize those list of customer IDs into Google or Facebook or LinkedIn or Bing or whatever the platform is on the internet, and then create really targeted advertising campaigns. So that increases the return on investment that the advertiser gets from that marketing and increases the effectiveness and results as well. Some of the other use cases with Wondrous is being able to use that predictive data to help drive personalization of content in websites and digital applications and some of those other solutions that we provide for customers as well. If anyone is interested in more information, Mark, I might send you a link to a video. Maybe you can send the video link out after this, which has got a demo of the platform so people can sort of see what it looks like.
Yeah, sure. That'd be great.
As far as I go to market, I'll just sort of talk. We've spoken a little bit. We land customers. We land them, with solving a single problem for a single use case. We start small. Once we've done that, we then expand the relationship across that stack and continue to upsell and cross-sell the different solutions that we offer customers. We make recurring revenue in three different ways. So we sell software licenses. So they're licenses to Wondrous and our Holoscribe platform, as well as some of the Google technology. We generate usage fees, as I mentioned before, from when people are using cloud and advertising through that Google technology. And something we do a little bit differently as well is we attach a managed service subscription to the software licenses. So what that means is our customer success teams can stay very close to the customers to ensure that they're really getting good value from that software that they've purchased. But it also means, because they're staying close to them, it's much easier to continue to cross-sell and upsell the other solutions that we provide. Our recurring revenue accounts for approximately 90% of our revenue. So we've got very, very strong annuity revenue streams. And then on the non-recurring side, which is about 10% of the revenue, it's things like professional services, some of that upfront land sort of consulting and audits that we do, and any onboarding or implementation work that we sort of do for customers to help them get data into the platform and get them on their way. There's 5 pillars to our growth strategy. The first is really driving and strengthening our existing solutions. Back in June of last year, we did a tuck-in acquisition. It was a company called Internetrics. One of the things that was really attractive to us about that business is they had some very good enterprise customers on recurring revenue contracts. Those customers were Webjet, Car Sales and Domino's. So we've been able to not only renew those customers, but we've also been able to expand them as well, which has been really good to validate that investment hypothesis that we could acquire a business and then expand the customers to different areas of our stack. They had some great talent, which is obviously very important in a technology business. And that business was running quite low margins, and I'll walk through the margins shortly, but be able to expand those margins very quickly. So if we're able to find other strategic sort of tuck-in acquisitions like that, it's certainly something that we'll consider as we continue to grow, but it will be to complement our organic growth rather than drive growth via acquisition. We're going to continue to expand the sort of uptake and the cross-sell of our existing solutions. A large part of the use of funds from our IPO, over 50%, it will be invested over the next sort of 2 years into really accelerating our organic growth through sales and marketing capabilities and extra customer acquisition activities. We've spoken through our Google relationship and our Facebook relationship. So expanding those relationships, not just with those vendors and getting more out of it, but also looking at some other partnerships with some of the other global vendors is important to us as well. And finally, really extending the Wondrous platform ecosystem that sits around our Wondrous customer data platform. And that really has got two sides to it. The first of it is the APIs and to enable our customers to build on top of Wondrous and access the data and information that's in Wondrous so they can use it for different use cases in the business. And secondly, it's externally about integrating Wondrous into the online SaaS marketplaces. So, a lot of the global vendors like Google and Microsoft and Salesforce and HubSpot and various others have these online SaaS marketplaces. And those enable their customers to buy solutions like ours online. So certainly a part of our product roadmap is to get our platform integrated into those marketplaces. We'll use that to expand distribution online, but it'll also help give us data points so we can understand where we need to focus other geographic expansion investment, because we don't want to, charge off into the sunset and start hiring people all in different geographic markets without some data to support that hypothesis. So we'll take quite a data-driven approach to that sort of geographic expansion, and we'll use those SaaS marketplaces to capture some of that data. I'll just switch to our results because these are the most recent figures that we released to the market last Friday. Can you see that, Mark? Has it switched to the financial metrics?
Yeah, I can see I can see it perfectly.
Yeah. Okay, great. So ARR for December 31, we finished the quarter at 13.1 million in ARR. That was up 2.1 million on the previous quarter, so quite a strong result. So we grew 148% year on year for the same quarter last year. And on a like-for-like basis, when we pro forma in the Internetrics acquisition that we did in June, we're up 80%, and quarter on quarter we're up 19%. And that was consistent with the previous quarter, although it was off a higher base for this quarter. Our revenue, 3.2 million, so that was up 185% year on year and 74% like-for-like. Our gross profit, 2.1 million, so that was up 207% year on year and 110% like-for-like. And our margin, 64%. So year on year is up 4 percentage points. However, on a like-for-like basis, it was up 11 percentage points. And that's because, like I mentioned, that Internetrics acquisition was running quite low margin. So when you pro forma it in, it sort of brought our blended GP down to 53%, but we've been able to, as you can see, expand that quite quickly. So, back to 64% now. So we're quite pleased with the margin expansion on that. And I'll just sort of talk through some of our unit economics as well. So, these are key metrics that we sort of run the business by. Our average monthly customer retention rate was 99.6%. So we don't churn a lot of customers. What we offer is very sticky and very valuable to our customers. That 99.6% has been consistent now for the last 3 quarters. So it's been very positive. Not only do we keep our customers, but we're continuing to expand them. So our revenue retention rate's 131%. That's up from 119% in the previous quarter. So a lot of the growth in that annualized recurring revenue has come from existing customers continuing to expand and buy different components of that stack that we spoke about. Our lifetime value is 776,000. That's up from 700,000 on the previous quarter. That's a gross margin lifetime value as well, so you can get a real transparent view of what a customer's worth to us on a gross margin perspective. A cost per acquisition, or a CAC, it was 35K. That is up from 28K in the previous quarter, and we do expect that to continue to go up. We're investing very heavily in new sales and marketing capabilities. We hired 22 new people in the quarter just gone, and 5 of those are in sales and marketing. So some of their salary costs have came into the cost per acquisition calculation. However, the lag between when we hire people and when they start producing and winning new customers, because we're selling to enterprise accounts, there's that enterprise sales cycle to take into account. So typically what we think about when we're hiring new salespeople is in the first quarter, they won't be productive. We don't expect anything out of them in the first quarter. The second quarter, we certainly expect them to start to producing some results. By the third quarter, they should be up to 75% of their full ramp. And by quarter 4, they should be at 100% capacity. So we will see that cost per acquisition go up as we continue to hire new salespeople, and we do have that lag on the sales cycle. But we think we've still got plenty of headroom there, and we're quite comfortable with that. Our LTV to CAC ratio is 22 times. That's down from 25 the previous quarter. And our payback period for our CAC is 7 months, which is up from 6 months on the previous quarter. Still well within the range. We're sort of focused on making sure we keep that number under 12 months, which is sort of industry benchmark. So we're quite comfortable if that number goes up in the short term as we continue to build capacity in our sales teams. And our total lifetime value is 153 million across our entire customer base. So, we're quite bullish about the future. We think there's a lot of positive trends happening. We only listed on the 16th of December last year, so we really haven't had a chance to deploy that capital yet. That's what we're focused on now. So as we continue to invest in additional sales and marketing capability and capacity to really accelerate the pipeline, we would expect our growth to continue as we keep winning new customers and expanding them. We've been able to consistently demonstrate quarter on quarter. Not only do we win customers and we keep them, but we grow them over time because we've got multiple levers to pull on growth as far as selling different components of a stack go. So that's quite positive for our outlook, we think. This issue with third-party cookies going away and the increase in privacy, there is quite a hard deadline on that. Currently, Apple have stopped allowing third-party cookie tracking, so has Microsoft and Mozilla Firefox. Google still allow it through Google Chrome, which is the biggest, most heavily used browser on the web still. But that will be stopping either the first or second quarter of 2023, according to Google. So there is a hard deadline on that, which we think is going to continue to drive demand for particularly our Wondrous customer data platform. And then finally there as well, like I mentioned, Mark Zuckerberg did us a massive favor when he rebranded Facebook to Meta. So there's still a bit of a journey to go. Like I mentioned, there's sort of 2 to 3 years, we think, before the metaverse is actually mainstream and real. But that does give us a great opportunity to continue to sell our Wholescribe platform as a bridge to that metaverse in the short term. But also as that growth wave comes through in the next couple of years, it gives us future sort of growth horizons that hopefully will keep us growing very strongly well into the future. So I think that is all I wanted to talk through today. So I'll just quickly talk about our team actually. So very lucky, I've got a great team around me. Our chair is a gentleman called Phil Aris. So Phil's on the board of Credit Corp, which is an ASX 200 company. He's formerly the MD at Count Plus, another ASX company. He ran the credit card business at CBA. So Phil brings a really nice blend of sort of finance and governance capabilities to the board and complements me very well. I'm an entrepreneur and I love technology and I love customers and I love product and I love sales, and feels quite a good balance to that. Our third non-exec director is a gentleman called Tim Ebick. So Tim was the former CEO of SAP in Australia and New Zealand, and also Oracle. He's also the chief commercial officer of MBN Co. So he's got a very strong pedigree in these big global technology companies. Tim's also on the board of ReadyTech, which is another ASX listed technology company. So he brings a nice blend of global vendor experience and ASX technology experience. Leanne Wolski is our group CFO. Leanne was at Amasim before she joined us, and took Amasim through a similar journey that Xpon's been through. She joined the business very early and took them through that IPO process, and that's what she's done here at Xpon over the last 2 years as well. Jennifer Kalan is our group CMO. Jen only started in the business in October, so a very recent hire. She was the former GM of marketing and channels at WiseTech, so very excited about Jen's experience and the value that she'll create in the business, particularly as she starts to ramp up her team and we can deploy some of these IPO funds to support that. And then we've got our 3 business unit CEOs. So Chris Rosick is the CEO of Australia and New Zealand Technologies business. Ben Fogarty is the CEO of our UK and Europe Technologies business. And Simon Pereira is the CEO of our platforms business that develops and commercializes our Wondrous and Holoscribe platforms. So everyone's got plenty of skin in the game. I think between myself and the leadership and board, we own over 52% of the business still. Very entrepreneurial, very founder-led, and part of that, founder-led entrepreneurialism, we think is part of the secret sauce while we've been able to grow so quickly, and we want to continue to foster that entrepreneurialism in the business as we continue to scale. Okay, I might leave it there. That's all I've got from a presentation perspective, and see if there's any questions.
Yeah, we have some, Matt. The first one, we got a timeline on the SaaS marketplace distribution, and are you planning to expand to all the marketplaces? I think you referenced 4 or 5 of them in your presentation there, all at once, or will it be incrementally? Is HubSpot kind of the main target to get off the ground first, or is it one of the others, for example?
Yeah, great question. So we will do that incrementally because it's not very practical to do them all at once. Having said that, a lot of the core like technology infrastructure that we need to do that has been built. We have integrated it and it is ready to go for the Google Cloud Marketplace. That's waiting on approval from Google in the US. So the timing of that is a little bit outside of our control because it's waiting there for Google to put through their security checks and approval processes, but we would hope that that's not going to be delayed for too long. And then once we've sort of got that underway, I think what we're going to do is sort of evaluate some of those other SaaS marketplaces based on our current customer needs, and we'll prioritize them based on that.
And then just a question on customers. You referenced some of them are paying, can be 5 to 10 grand a month. Others, it can be close to 700,000 or 800,000 annually. Is it a broadly diversified customer, or is there a base, or is there kind of 1 or 2 big ones, i.e., greater than 5% of revenue in that revenue number?
Yeah, it's a good question. So now we've got quite a good mix of customers. One of the things that we inherited when we did that acquisition in June last year was they did have quite a long tail of sort of SME customers, which really don't fit our Xpon sort of customer profile moving forward. So some of those customers will evaluate what we do with those moving forward, but we are very much focused on customers that we think have the potential to grow to be $1 million a year annualized recurring revenue customers. We don't have a customer at $1 million a year yet. There's obviously a nice sales bonus for the first sales guy that can get us that customer, but yeah, there is, there's a few in that sort of 600,000 to 800,000 range, and then there's some more that sit in the sort of 200 to 500 range, and then there's another sort of component of them that sit in that sort of 50 to 200 range from an annualized recurring revenue perspective. So, the portfolios of customers is not heavily weighted to one or two, whales. There is quite a nice sort of spread across those sort of three sort of categories.
And then when you're talking about the customer verticals, I noticed government wasn't really in there. I'm just thinking, in terms of their, whether it's doing public health announcements now around COVID or trying to target people with, government initiatives, whether that's at, small business or they're on a big recruitment drive, whether it's at, the state level or the federal level. Is that a vertical you would consider trying to break into, or not really?
Yeah, we do have government customers. The Queensland government's a customer, New South Wales government is a customer as well. It's not a vertical that we're aggressively going after, but it is a vertical that, if the opportunity presents itself and there's a good fit, then we'd certainly look at it. But it's not something we're focused on right now, because we think particularly financial services and retail, that's where we think we can get the most traction with the shortest time to close. They have burning needs to deal with this third-party cooking issue going away. And so that's where we're seeing the most traction, and that's where we're focused on primarily at the moment.
And final question, just on that, when Apple came out with iOS 14, did you see kind of post that launch, an acceleration of interest from companies, and will that, do you think, be repeated when Google finally pulls the plug?
Yeah, it's a good question, because what we saw was, yes, there was definitely an increase in conversations and interest, but what we're finding, particularly in the Australian market, is there seems to be this sort of I think it's false too, this sort of false perception that companies still have time to deal with this issue. However, when Apple did do that update, I think 90% of that data that was going to Facebook previously stopped overnight. So it's a huge drop, and we saw that in the data profile for our customers, just what sort of an impact that made just from that Apple update. So yeah, we're certainly seeing that interest starting to, shift now into a higher sense of urgency. And yeah, absolutely, as that deadline for the Google changes comes up, we would definitely anticipate that interest should transform into urgent action over time.
Okay, Matt, we've gone slightly over time, but thank you very much for coming in and giving us an update. And once again, congrats on getting the IPO done. Not an easy process by any means. And we'll keep an eye out on the ASX announcements platform for all things Xpon over the next 12 months.
No, thank you, Mark. Thanks for having me.
Thanks, everyone. And just a reminder, we've got another meeting happening tomorrow morning, 9 a.m. For anybody who wants to come and join us for that. And with that, I'll say have a good rest of your Thursday.